like a Hang Seng, which is opening after a day's break. That one is up 0.2%.
I think you'll start seeing interest rates coming.
But the 22,300 level should not break on the way down, which is yesterday's low.
Look at new loans. They are down more than 20% quarter on quarter due to RBI diktat on their e-com as well as Insta EMI cards.
We sell something like 12 or 13 million air conditioners. China is at 220.
You got the Nifty Bank, which is down about 0.25%, 47,938, right?
So they will do a tightrope walk like they usually do, and they do a good job of it.
Keep the policy repo rate unchanged at 6.5%.
The liquidity management in the banks has become more complex.
Earlier, there has been no change in RBI's policy.
Nifty Realty Pack, that continues to do well. That's the top sectoral gainer today.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me, Surbhi Upadhyay and Nigel D'Souza. Last hour of the day, week, and things are quiet, right? It was a policy day, it's come and gone, and the mid-cap action outperformance just continues.
Absolutely, and I'd say because of that, Reema, the fact that this is a week in which we've consolidated, a couple of important things have happened. A, we've consolidated, but with a positive bias, because look at where we are. All things equal, 22,500 is on the board. The mid-cap I wouldn't call it party, but the mid-cap market is buzzing again. There's confidence that's returned, and it seems right now, the verdict is clear that that little shallow correction that's perhaps behind us, at least maybe we can say that for now. And the third important trend that this week has heralded is the comeback of banks. And today is the second day running that we've got a solid move, for instance, on an HDFC Bank. The Bank Nifty is performing. I don't want to jinx it because we've had several false starts earlier this year as well. But I think with mid-cap stabilizing, banks starting to perform, we're in a good place.
And markets are holding on to 22,500 despite the rise in crude prices that we've seen this week. Brent crude, by the way, is at $91 per barrel, a 5-month high. And despite that, markets are where they are. Just a quick comparison of the week-to-date performance of India versus the rest of the globe. And there is some serious outperformance. So week-to-date, the Nifty is up nearly 1%. Mid-cap index is up 4%. The small-cap index is up 7%. At a time when the US key indices are down anywhere between 2 to 3%. Also, in terms of the banks, it's HDFC Bank, which is in pole position. So HDFC Bank's week-to-date performance versus the others. And there you have it, some serious outperformance and a catch-up taking place.
Well, that's right. The big boys return. And you know who's bounced up in the last 1 hour or so is ITC. Now, ITC has spiked up. That's a large weight on the index. Remember, it corrected from around 500 rupees to around 400 rupees. And just in the last 10-15 minutes or so, that's fighting back, which is obviously good news from a bullish perspective and explains why this market continues to remain a buy on dips market. How do you trade, though? The final 60 minutes of trade, it's going to be interesting. Mitesh Thakur joins us to help us out with some strategies on Closing Bell. Hi, Mitesh. Good afternoon and good to see you in. What's your view? We've seen a good buy on dips that's played out. We have a big economic data point that comes in from the United States later today with regard to the jobs report. So what do? If you bought the dip, close out your position, or you believe that we're good for more, why should I close out? Just trail your stop loss.
So, good afternoon, Nigel. I think, as I said in the morning, it's the Bank Nifty which is looking stronger in the short term, and therefore, I think it's also preventing any kind of decline in the Nifty. And typically, as a trader, you would want your position to run in case it's profitable and try and trail the stop loss. So, I think the current level is about 22,370 on this spot, which is where the stop loss should be, and hold on to long positions. I'm expecting that the Bank Nifty will, possibly get past the earlier highs of 48,500 on a closing basis and 48,630 on a intraday basis. And once that happens, then I think we are looking at possibly 49,300, 400 in the Bank Nifty, which would mean that the Nifty itself would also get some kind of fillip on the upside, and we can see higher levels over there. Having said that, BEL is on the buying list. Buy here with the stop at about 219 for targets of 240. And also from the banking side, Kotak Bank is coming out of the hourly consolidation on the positive side. So buy here with the stop at 1760 for targets of 1810.
Okay, got that. So that's Kotak Mahindra Bank. By the way, the Bank Nifty is now less than 0.5% away from hitting its all-time peak. It hasn't done that, was lagging behind the Nifty. And this week's gains are about 2.5%. Let's just pull up ICICI Bank. That's also seeing a quick burst on the charts. Most of these names, actually. ICICI Bank, Kotak, of course, Mitesh mentioned. And even on IndusInd, etc., there's a further leg up that's playing out. That's a big move on ICICI. Just quickly, levels on ICICI as well, Mitesh. And would this make the cut for you in terms of a long trade now?
Sorry, can you repeat that again?
ICICI Bank, Mitesh. There's a big move right now happening on the chart. So just wanted to do a quick check on levels.
So I think, ICICI Bank should be... this was actually sideways for many weeks now and still is, possibly given sideways. But today it's moved up from the lower end of the range, which is around 1060, and might hit the upper end of the range at about 1100. So it's bounced back to the middle part, but I think it's heading towards the upper end, 1100. Once we get a closing about that, then I think I'm looking at a much higher target of 1145 here.
Okay. Let's move on then to Marico. The company's consolidated revenue grew in low single digits in the fourth quarter. Mangalam joins in to tell us more. Mangalam.
Well, it's interesting, right? When Dabur yesterday said that their consolidated revenue grew in mid-single digits, the stock actually fell 5%, whereas Marico reported a growth of low single digit and the stock is actually higher. Well, why is that? Because Marico is actually on an improving trajectory. So the revenue for the company in terms of growth has moved back to positive territory after 3 quarters of negative growth. They in fact said that the domestic business posted a slight uptick in volume growth as well. Parachute coconut oil registered low single-digit volume growth. Value-added hair oils had an optically weak quarter, declining on a very high base. And then you had Saffola as well, which delivered mid-single-digit volume growth. So across all parameters, there was sequential improvement, and that is something that the street likes. Importantly, the big difference between Dabur's update and Marico's was that Dabur said that they will have just slightly ahead of revenue growth, EBITDA growth, whereas Marico said that their operating profit will grow in low double digit and there will be strong gross margin expansion, which will then be reinvested into ad spends itself. And they will also, going forward, see revenue growth outpace volume growth. So that's telling you that going forward as well, the positive revenue trajectory will continue as price hikes are now in the base and price cuts are also in the base. Going forward, it will be volume plus revenue-led growth, and that is something that the street likes.
Okay, all right. Mangalam, Street has read this very, very positively. Thanks a lot for joining and giving us those details. I want Dilip's view on Marico, but for the time, we just take a look at Godrej Properties. They've sold homes worth 2,690 crore rupees at the launch of Godrej Reserve project in Mumbai, and that stock has taken off. It was doing well for majority of the trading session. Now it moves to the high point of the day. Dilip Bhatt joins us on the show. Hi, Dilip. Always good to see you in and hope you're having a good Friday. Well, tell us first on Marico and then maybe we could discuss the real estate theme. Marico, the street likes what they've seen in terms of the operational performance. There are signs that maybe there'll be good gross margin expansion and growth is coming back. Your take?
Thanks a lot, Nigel. I think what we are seeing is that some kind of volume growth kicking in, whether it's Dabur or whether it's Marico. And I think the FMCG kind of companies are really seeing back to the positive volume growth, though they are nothing really great to talk about. But all the same, I think there are 2-3 things playing out over here. One is the costs are sobering down thanks to the overall inflation being under control, though they remain volatile as what the RBI says. So I think that is one part. And if the volume growth comes in, I think they'll have a good top line growth. And of course, the operating leverage also will play its part then. So my take is that, yes, we are seeing some kind of good recovery for some of this FMCG, particularly Marico. But at the current valuation, it is something that does not really excite us, nor inspire us to buy at the moment. We will wait and watch for some time before we think about committing to buy any of these stocks.
Okay, some more details on Godrej Properties news about selling homes worth nearly 2,700 crore rupees in Godrej Reserve. Godrej Reserve is in the Kandivali suburb of Mumbai, and the company says that this is Godrej Properties' most successful launch ever in Mumbai in terms of value and volume of sales achieved. Godrej Reserves, which is the project that they're talking about, has a developable potential of an estimated revenue of 7,000 crore rupees. So of that, only 2,700 clearly has been achieved, sold so far. But 7,000 is the total revenue potential of this particular project. They have significant unlaunched inventory remaining, which the company plans to sell in the coming years. This is one of the company's largest residential development and significantly enhances its presence in the western suburbs in Mumbai. So that's the update coming in on Godrej property. Dilip, a lot of Q4 updates have come in, Macrotech, Sobha. Now Godrej Properties is also talking about, one of their particular projects. In real estate, is there any particular micro market where you see a lot of upside? Any stock that you'd like to highlight?
So, well, I think we are seeing a good amount of traction in terms of the pre-sales. We have seen that whether it is Brigade, whether it is DLF, now even in terms of Godrej, we are seeing that on the launch itself, we are seeing a good amount of sales and good amount of interest coming in. So real estate still continues to be one of the sectors that possibly can give a reasonable return even from the current levels. Not to forget that most of the stocks have really moved up quite a bit. But if one were to talk about next 9 months to 12 months, I think we'll continue to see a good traction in terms of sales. But what is very conspicuous, we must say, is that most of these developers are in the mid or the higher premium segment. And we should not forget that that is the one which is really driving the overall sales and which also has a good profit margins. So I think both are very positive, giving a good tailwind to most of the real estate companies. But within I think the whole pack, I will still say that something like DLF still looks pretty interesting. Though one should moderate their expectation in terms of the returns for DLF. But I think Macrotech still continues to be one of the stock which can really give a big returns over the next 18 to 24 months. I think we'll see a good amount of the pre-sales happening. We'll see a good amount of cash getting generated. So I think the overall loan also probably will be taking a southward course. So I think overall, one thing which stands out for all the real estate companies is the cash flows will continue to look extremely good, extremely healthy for most of these real estate players.
All right, got that. Dilip, stay on. We'll have some more questions for you. Let's also focus on Bajaj Finance. Speaking of updates, we got one from this lender as well. And the numbers actually don't look as good as what the market's seen in the past, because the year-on-year growth on new loans is just about 4%. And quarter-on-quarter, there's a big dip. Abhishek is joining in with the details. Abhishek, regulatory issues finally showing up?
Well, RBI diktat has led to weak business momentum for Bajaj Finance. If you take a look, new loans are up 4% YOY, but they are down more than 20% quarter-on-quarter. So the quarter-on-quarter decline of more than 20% is perhaps the highest decline that they have seen in the last 15 quarters. RBI diktat is that there is restrictions on sanctions and disbursals of loans under e-com as well as Insta EMI card, which about 0.8 million is what they mentioned is that the new loans have come down by. Despite this, 13% plus decline would have been there in new loans if you exclude this part as well. Now, cross-sell rate, which is a very important factor to watch out for, that is at 11-quarter low at 5.5% versus 6.66% in the same quarter last year and about 7.5% that it was in the previous quarter. Customer base remains steady, growing at 21% YOY and about 4% sequentially. Deposit momentum has slowed down sequentially. So sequentially, they used to see deposit momentum of anywhere between 5% to 10%, but this time around it's at 3.6%. Average ticket size, that's grown by 10.5% YOY and about 2.1% sequentially. The AM growth YOY looks healthy at 33.5%, but sequential growth of 6.25% is perhaps one of the slowest growth that you are seeing in last 5 quarters. Back to you.
Okay, Abhishek, hang on. We have to talk to you about some of the other numbers as well. But before that, on Bajaj Finance specifically, I wanted to get Dilip's take. Dilip, now what we are seeing here, obviously these are regulatory issues, so this quarter's numbers look, worse off. But what's the bigger picture over here? I mean, the market was willing to pay top-notch premium, but for 30% growth every quarter. Now, is that a thing of the past? And if yes, then what should an investor's approach be to Bajaj Finance?
Sure, I think what you said was quite right. That the extraordinary premium that one pays to them is basically because of the kind of growth that they have been showing. Something like what HDFC Bank had been doing. I think they have been showing a very strong growth. But I don't think that one should be unduly disturbed. Yes, it's a regulatory issue, and possibly that will slow down. But knowing the management of Bajaj Finance, I think they will find a lot of other avenues. I think one of the avenues which can really open up so well for Bajaj Finance is this the way the real estate developers are doing so well. And I think the funding to them has come down from most of the other players. And this is where I think Bajaj Finance possibly might be focusing on, is what I have understood. I think they are focusing, Piramal is also focusing. So I think that can also be a good opportunity for growth, because there the NIMs are also pretty good. Of course, it carries own amount of risk that when you give the developers the kind of loans that we are talking about, and it's a B2B business. So having said all that, I think Bajaj Finance, possibly from the current levels, may spend some time around these levels, possibly some small correction, but one should look at buying this on a long-term basis.
Okay, buy Bajaj Finance for the longer term. Abhishek is still with us. Abhishek, IndusInd Bank and Aavas Financiers, how were their business updates?
Well, Reema, to begin with IndusInd Bank, it's a mixed bag coming out of the business update that they have given. The deposit growth, if you take a look at the peer comparison, is on the lower side. However, for them, this lower rate is also one of the highest that you are seeing in many quarters. So, YOY growth of deposit is about 14.4%, which is the highest in last 3 quarters. Sequential growth is of 4.3%, which is the highest in last 11 quarters. And what you have seen for others, the growth has been north of 5% to as high as 20% that you saw for Suryodaya Small Finance Bank on a sequential basis. Now, CASA ratios, that's dipped to 27-quarter low of 37.9% when compared to 38.5% in the previous quarter. The retail deposit momentum on a sequential basis is just 2.5%. This means that they might have taken high-cost deposits this time around, and that may weigh in on the net interest margin. As and when the results come out, we'll get to know that. So our retail deposit share has shrunk to 44% versus 44.8% in the previous quarter. Advances growth is at 18.3% YOY, which is the lowest in last 6 quarters, and it's up 4.8% sequentially, which is the highest in last 4 quarters. CD ratio is one of the highest that you are seeing in last 15 quarters, coming in at 89.1% when compared to 88.7% in the previous quarter. For Aavas Financiers, the business momentum has been pretty strong thanks to the disbursements growth that they have seen. So disbursements are up 38.7% quarter on quarter. This has led to AUM growth of more than 22% YOY and about 7.5% sequentially. The disbursements to AUM ratio has remained stable for them at 64.5% versus 66.7% in the previous quarter. Asset quality has improved there. Gross NPA ratio has come down to 0.95 versus more than 1% in the previous quarter, and liquidity in the balance sheet remains strong. It's at 3,000 crore, which forms about 17.3% of the AUM. Back to you.
Okay. All right, Abhishek, thank you very much. So lots and lots of quarterly updates in from the BFSI space. Just to complete that point, Dilip, anything else that stood out for you? I mean, we spoke on Bajaj Finance in detail. Anything else that caught your attention in the numbers that we've seen, whether it's banks or NBFCs? A lot of the small finance banks also,
Sure. I think one of the patterns that is emerging is that the CD ratio continues to be at the top. And secondly, the cost of borrowing increases quite a bit. And then if you were to take the RBI dictate that the unsecured loans, which was forming a good part of the overall credit growth, that is under the scanner, and that is what is forcing everyone to reduce that particular portion of loan, which is also the most profitable in terms of the NIM. Then I think what we are really seeing is that the NIMs on an overall basis will get compressed on the back of a slightly lower credit growth. I think that is the pattern which is emerging at the moment.
Okay, all right. Dilip, I also wanted your view on Vedanta. Now, that's the star of last couple of weeks, actually. Commodities do well, Vedanta does well. Promoter entity is always a question mark out there. But the stock has delivered, and maybe going by the prices of commodities, things could look up from here. Your take?
Surely, I think the tailwind in terms of the commodity prices is giving a good spurt to the stock, but also the very fact that they are going to raise the money, they are seeking to raise fresh funds, is also going to help improve the perception of the stock, because the perception was that there was some kind of liquidity problem for the promoters, and we have seen that Vedanta has been such a generous paymaster as far as the dividend goes. So I think some of those things were becoming increasingly coming under the question. But I think both the commodity price increase as well as fresh fundraising will help improve the perception and, of course, the valuation of the stock also.
By the way, remember that tomorrow the Vodafone Idea board also meets, where they will consider, an equity fundraise via the preferential issue to the promoters to the tune of 2,075 crore rupees. So that stock should be on your radar, and watch for the news flow on Vodafone Idea. And in anticipation of that, it's Indus Stars which has seen an up move. Not just today, Indus Stars today is up 2.5%, but this week it's seen an up move of close to about 8%, and year to date it's a 58% rally seen on Indus Stars. So as Vodafone Idea's prospects appear stronger in terms of a capital raise, Indus Stars is hopeful of the receivables coming down and the financial position getting stronger. Dilip, Indus Stars, is that a stock that you've looked at?
No, not really. I haven't had an opportunity to go through that in details, so unable to comment on that.
Okay. What about something like an Angel One? They've just completed that, QIP. They've raised 1,500 crore rupees. So that's growth capital, which is welcome. But on the other hand, the company's gross customer acquisition has been coming down for 3 consecutive months. Is that a bit of a worry?
Well, I think the way Angel has grown, without any doubt, in terms of the parameters, they have been at the top as compared to their peers. And if this has come down, the customer acquisition has come down, maybe I don't think it's so much a point of worry immediately, because I think all that is got reflected in the price. But more important is the outlook. I think the way some of those parameters look, whether the opening of the demat accounts and the way Angel is positioning itself in a very aggressive way going forward with this kind of money, I think I would still say that one has to be a lot more optimistic on Angel, because in the past also, you must give it to the management that they have done all the right things, and one can trust them that they will, with the help of this capital, they will do something much more positive. And I think one can trust that the kind of opportunities that is being thrown up, they will be the maximum major beneficiaries in that.
Okay, that's Angel One, Dilip. All right, thank you very much for joining in. Always a pleasure having you on the show and getting some opinion from you. So you have a good weekend, and we'll see you again soon. I just want to point out a couple of financial stocks which are looking very interesting before we hit the break. SBI Card, a 4.5% up move on SBI Card, and this is not a stock that has moved in the longest time. I mean, it's been an underperformer completely last 1 year, this year as well. But today, we're seeing that 4.5% up move on SBI Card. That's one. There's ICICI Lombard from the insurance space that's having a good session, 4.5% up on Lombard. So SBI Card, Lombard. There's PB Fintech, which is up about 4%. And there's IIFL Finance, which is up 12%. So some very interesting moves on a whole bunch of BFSI, non-lender BFSI stocks.
Well, Linde India, that's been one of the big outperformers actually. And suddenly that stock has fallen off the cliff. So we're just trying to check whether or not there is some news flow out there, but that one clearly is getting hit, and it's getting hit very, very hard. We're just trying to check if any kind of fundamental news has come about. But that one has been a big outperformer, and now it's coming in for a sharp knock in trade, moving to the low point of the day as we speak.
There is a Business World article on Linde India where they're talking about I think SEBI probing the financials and business transaction of Linde India. But again, this is what reports are suggesting. One of the reports, we'll wait by for any official commentary or any update from the company. But clearly, Linde India, the star over the last many years, today is under severe pressure. Okay, let's move on then, and get you some more opinion that we got earlier today. It's on HDFC Bank, and that's clearly been the stock of the week. It's up nearly 8%. Now, HDFC Bank looks fundamentally attractive, says Conrad Saldana, Managing Director and Portfolio Manager at Neuberger Berman. He also likes Indian hospital sector. As we slip into a break, listen into excerpts of that conversation with him.
One of the areas that's been left behind until more recently has been the financial sector, right? There's been concern whether it's on the NBFC side, obviously the biggest one, HDFC, that deposit growth looks pretty solid. And that's what people were hoping for in this quarter. And they seem to be getting aggressive and working through the merger process. So I do think the financials still look pretty reasonable, especially I would say the private sector financials, the larger private sector financials that were kind of laggards in this whole run. The merger process and the synergies to play out is going to take a fair bit of time, right? Seeing the deposits come back, which is the raw material for them to be able to lend again, is important. I do think there's room for HDFC. You consider HDFC Bank at sub 2 times book value, right? We're talking about close to even 1.7 times book value. It does look attractive fundamentally, but it's going to come back to them consistently growing, showing those synergies coming through. That's going to be a 18 to 24 month process. One area I will mention since the last time we spoke, given the volatility in the market, you had that sell-off earlier, we like the hospital sector. And this is one we've got quite a few exposures in our portfolio. Max was a newer name for us. Again, high return businesses, they're growing faster on the larger cap side. Max was an opportunity, given that there was noise about the Supreme Court looking at containing pricing or limiting pricing. Obviously, that created an opportunity. I think it's difficult to implement. But as you're seeing more and more insurance starting to pay for these treatment and services, 50+% as that grows larger, I think it's still got a significant runway for the healthcare sector.
Welcome back. Here with us on Closing Bell, and our next guest on the show is Amit Jeswani, founder and CIO at Stallion Asset. Amit, hi, great to have you on. Hope you've had a good week. It's Friday, so time for some more perspective. So just tell us. We know about some of your recent additions, and I remember our last conversation, stocks like Angel One, Zomato. So it's probably a really healthy-looking green portfolio. But from here on, now that the mid-cap market has shown some signs of stability, are you looking at fresh deployment, new ideas, or redeploying in your current bets? What's the thought process now?
Hi, Surbhi. Good afternoon. Thank you so much for having me on your show. Yes, we're looking at new ideas very aggressively because our ideas have moved up so much. We want new ideas, just that it's getting very difficult to find full tosses. So there is no easy money. So last year I was saying that we were choosers. Today we are beggars for ideas. So it's just moved the other way. And if we get ideas, you need liquidity. You need to act very quickly. Hopefully we'll be at the peak. This is the start of earnings season. We're just getting started. So we don't have too much exposure towards the lending part of the business. So for us, lending season has not started. As soon as the earnings season starts.
Amit, I think we have you on a bad line. Just give us a moment. I think we'll try and reconnect and get you on better audio. But just to go back and sort of jog our memory and remind our viewers as well. So they've got a lot of the stocks that have done pretty well. I mean, and some of them are from the consumer/consumer tech space. Policy Bazaar, Zomato. These are some of the names. They actually also have Angel One, so it'll be interesting to get his take on Angel One now, considering that it's sort of the first time that we're getting a little bit of a slowdown in those numbers.
I think I remember Angel One, Amit had told us one of the interactions that they got in early, they got out and they got back in. So it's the second entry, I think, for them. So we'll wait to hear from Amit. But by the way, let's pull up a few stocks, till Amit comes back to us. Birla Soft, the stock is now down close to 4%. I'm not sure if there's some news flow there. But that one's taken a sharp dive in the last few minutes. Loris Laboratories, I think we were mentioning on the channel as well that there is some hope that maybe they get a large order. For the time being, that's not yet come about, though the stock has seen a good run this week. It's up close to around 11% for the week. Loris moves to the low point of the day, so keep an eye out on that one. Gujarat Gas has now done a U-turn. There was some speculation with regard to some of these stocks, but it's given up all its gains and it's moved to the low point of the day. So that's another one that's on my radar. And on the flip side, there's a stock that's up 10%. NBCC, silently that stock is moving up. It spikes to the high point of the day. Honeywell as well moving up. So fair bit of action, guys, from the broader markets in terms of stock moves. And the one that's really holding one end up is HDFC Bank. So that's not letting the Nifty fall apart. That's saying I'm back, I'm in good form, and I'm going to hold one end up. I don't know whether Amit's back with us.
Okay, that's NBCC. That's holding out pretty well. A bunch of the infra names also. IRB, NCC. So a lot of these other stocks are also holding out. So let's do, okay, I think we do have Amit back with us. Amit, trying our luck again. So, we were just discussing this. Some perspective on Angel One will help because you've been a sort of a big bull on this one. But in the last couple of weeks, we've seen it's the first time that we're seeing a little bit of a slowdown in that client addition number, that client addition data. Does that bother you at all? How do you look at it?
Yes, of course, it bothers me. Anything that doesn't increase stock prices bothers me. We have money invested. We need to make returns. The client additions were actually not bad. They did 2.8 million client additions this quarter. In fact, last quarter, the numbers were tad bit not to my expectations because they did a lot more client additions. But $2.8 million client additions is not bad. The good part is that year over year, the order growth is 85%. Very few businesses in India that can grow at that scale. I think the only other business that will do that well, this year, this quarter should be 65%, 60% revenue growth for Angel. Let's see, because we were not very happy with the QIP for Angel, because it's an asset-light business. It typically doesn't need so much capital, but they're doing QIPs. So we're thinking, we're just rethinking because we have 15% exposure to capital markets. We have Nuvama, MCX, Angel in the portfolio. All three have done very well. Nuvama we will hold for sure. Angel and MCX, we're thinking that what stage are we in? We are in a stage where we'll make the next 50, 100%, or it'll be a 25% compound. We're just rethinking our position sizing here.
Rethinking only in Angel. MCX? Do you stay put in that?
No, we see. So, okay. So the way we think about it is, if my returns are, let's say, if I buy a stock at 100 rupees and I buy 5% weight, and my target is 200 rupees. When the stock moves from 100 rupees to 150 rupees, my position size becomes 7.5%, assuming all other trades are at the same price. So my position size becomes 7.5%, but my risk reward is not the same. From 100 to 200, I was making 100%, but from 150 to 200, you're only making 33%. So when you're making 33%, but the risk is the same, so you have to recalibrate your position size. So this is what we are trying to think on capital market, what should be, because we've made in 2 quarters, we've made broadly about 80% on capital market, 70-80%, which is very good. And we had sold our financials, our lending businesses, to get into capital markets because capital market is high beta. And to get into capital markets, we had to sell our high beta banks from the portfolio. And now we are thinking that what should be the right position size for capital markets. We will not eliminate capital markets. We'll just position size them right.
And would you look to get back into the lending, guys, perhaps in this quarter's earnings?
So if we get, so see, if like I will personally, like if the loan growth is 1.6% quarter over quarter and MSCI is the only play, then I will not do all that. If we get decent growth rate, like we liked Bajaj's number also at 34% growth, 20,000 crore addition in AUM without two products. So what they have done is very well. But you need price action also. Today also the stock is down about 1%. The markets are not ready to bid up NBFCs very aggressively. Poonawalla did very well with 54% growth in AUM. So that's the fastest growing guy, but they don't have a history of credit cycles. So to make a 1-2% position is okay, but to make a 5-6% position, you need like more cycles. Like if a lender has seen more cycles, you get more comfortable in the quality of loan that they do. But as of today, the highest growth guy is Poonawalla. Number 2 would be 5-star. Number 3 would be in the larger ones would be 5-star. Would be Bajaj Finance. So we don't have Poonawalla in the portfolio. I'm just telling you for the industry. So whatever I speak about, we may have vested interest. Me, my family, my clients may or may not have positions. But we have vested interest in virtually everything I speak, and these are not recommendations.
Okay, all right. Hi, Amit. Good to speak to you after a while. What about some of these pipe makers? You know, you were positive on one of them, which is JTL Industries. It gave a good pop, and the volume growth there was quite good at more than 40%. But now you had some kind of issue with regard to one investor that came in there on the preference issue. Are you all still invested? Have you all sold out? What is it?
We sold out. Our average selling price was 250, and we're out of.
Got it. Then give us some more new ideas then. You know, that worked well for you all. I recall in the past we've spoken about, I think, Aditya Vision, one of those stocks that you had spoken about, a couple of these other themes as well, capital marketplace. What new have you all done, say, in the last 45 days or so? As you said, it's become a little difficult to choose and get new themes, but have you all found some, or have you all added on some of those existing themes?
Actually, Nigel, we're not getting good ideas, to be honest. Last we added was little Indigo in our portfolio. That was doing the block, and that was something that we were ready for. But if you ask me that, have we built very large, aggressive positions? See, we are trying with 1%, 0.5% positions. But the big position, typically that we make a very large position is on earnings season. We do not make, when we make positions, this time we have 7% cash on the portfolio, 8% cash. Every time, just before earnings season, we come on some cash. Like we sold some JTL, we sold a few here and there. But now is the time, when earnings season is the time where we start making big, large positions. And whoever executes, see, I'll tell you where we are execution-based investors. Just see every sector, like Safari Industries versus VIP. There's a presentation which has come on VIP. VIP for last 6-7 years, the returns are 0%. Safari in the same time has gone up 10x. Safari every quarter was growing faster. All we have to see in our portfolio that are we in companies who are the fastest growing in their sector. And this is because we don't do B2G so much. We are mostly in consumer focus. It's a very tough quarter for consumer focus. Like in consumer focus right now, I would say I think the largest returns right now will be made in electronic retail. There are only 2 players here. But if summer is good, there is one player which has added double the store count in 2 years, and that should play out. It's a small cap player, but everyone knows our positions there. So I think if summer is okay, electronic retail will be, we should do very, very, very well in the next 6-7 months there.
Sorry, I missed that. You mentioned summer retail. I missed the name that you mentioned, the company.
So there are only 2 listed players, EMIL and Aditya Vision. Nigel already said that we have Aditya Vision in the portfolio. So we like that as a play for next one. Yeah.
You continue to like that. And between these luggage makers, you're making the point, VIP has been a big underperformer. I did a nice interview actually with the management, and they're talking up that the worst is behind them. Do you believe it, or will you rather stick to Safari, or do you have any exposure as of now?
I will come to know if what they're saying is truth every 90 days, right? So they need to grow faster than Jatia Ji for me to be interested. So they need to grow. If Safari is growing at 20% or 25%, then they need to grow faster than Safari to regain market share. And once that happens, we'll start looking at VIP also. We are very open we are open to changes, we are open to learning, we are open to change our positions also. But I'm just telling you that keep tracking every 90 days who's gaining. There are 71 industries in India. And in these, that we divide the market in 71 industries. And every quarter, you come to know who are the players who are gaining market share, who are the players who are losing market share. Our goal is to be invested in the guys who are gaining market share. Like Surbi was speaking about food delivery players. Now, there has been, for last 2 weeks, someone's been selling, like on WhatsApp, there's been Swiggy, financials are moving around, the 9-month data. It is very clear, that Zomato is way more efficient than Swiggy and is gaining market share very aggressively, not just in Zomato, but in Blinkit also. Very aggressively. I'm surprised actually looking at data.
Speaking of high growth companies, I'm not sure if you ever own Trent or if you still have it. Just tell us if you do, and just your thoughts, because that is pretty much became the definition of high growth, right? In a sector which was otherwise not really seen as very hot, talking mass retail. And then therefore your thoughts on now what the Aditya Birla Group is trying to do with the ABFRL.
Actually, till last quarter, it was our second largest position. Trend.
Okay. Why am I not surprised?
So right now, our largest position is Zomato. Number 2 is Polycab. Trent is number 3 is Policy Bazaar. I think Trent is number 4. But it is underperforming my other player bets. That is why it has moved to number 4. So they need to buckle up. But we will make decisions this quarter on Trent also. That Trent, we initially got in selling our DMart at 4,200 something. And we bought Trent at 1,1300, and Trent has done very well for us. So we kept looking at execution. DMart's execution was faltering. Trent was executing. We sold our DMart, got into Trent. If as Nigel asked me, will I get into VIP? If tomorrow VIP grows at 30-40% and Safari grows at 15%, we may do a
But you're happy. But you're happy riding Trent now, or are you looking to sort of maybe take some money off? No,
we will keep riding. We don't know how large a Trend can get. We don't try to catch the Trend top. So example, if Trend was 7-8% weight initially, today Trend is probably 7% weight. So we keep booking our profits to make sure a position doesn't go above 9-10% of our portfolio. That is all we do. Whenever it goes to 10%, we get it down to 8%. So it's like we never have concentrated positions of let us a player become 13-14%. But we keep cutting weights. Like we sold Trend at 2,000 rupees, 2,800 rupees, 3,000. I don't even remember prices. These are automated systems which sell. And whenever a portfolio's weight goes above a hard limit of 9-10%, we cut the weight down to 8% or 7%. But Trent has so it is an automated system. So we there is no number 2. Credo Brands came with an update. This is a new IPO. It was negative. Manyavar growth is negative SSG. Shoppers Stop growth is 2 or 3%. And then you have one player in fashion retail. Look at I have assuming, I'm not no recommendations, of course. We have Red Tape in our portfolio. Red Tape growth on shoe company. Red Tape growth last quarter was 29%. You see the price performance of Red Tape versus that of Campus Bata. Bata yesterday I was seeing he was making 52-week lows, if I'm not wrong. So, and my Red Tape is making 52-week highs. So we bought these at very reasonable prices, but we are tracking execution. We are execution-based investors. But if tomorrow Bata does better than Red Tape, we'll move to Bata also.
Got it. All right. Amit, appreciate you joining in. Thanks so much for giving us your thoughts. Do me a favor. You got the little guy at home. Give him a big hug across the weekend from my end. And appreciate you joining in. Enjoy life. Make a lot of money. Take care of your clients for that little guy. That's going to be the multi-bagger. Thanks so much for joining in, Amit. Okay. All right. Well, let's get you some market talk then. Earlier today, we spoke to Samir Arora, the founder and fund manager at Helios Capital, to discuss the outlook on the market, future economic policies that can assist the growth of the country, as well as his top sectoral bets. Let's listen to what he had to say.
In a big picture sense, I'm bullish on the budget, or I'm going to decide on that day what to do next in terms of varying my net a little bit, 5%, 10% here or there. Because Mr. Modi himself keeps saying that it will be a transformational budget. And so let's see what he means by that. And secondly, as the government in the last, the Feb budget said that they will be reducing the fiscal deficit, or that is one of their goals, it can only be done by aggressive selling off some state-owned companies. The Indian market has been compounding in the past in rupee terms at 13-15%, which is more or less in line with the earnings. Today, the valuation is not so attractive that we say it is the best time to invest, but neither is the valuation so bad because it hasn't gone up in the last many years. If you look at the full market, for us to feel this is some bad point to start, the fact that when India or somebody says we are growing at 7%, we take it for granted. But that 7% growth needs all these things to be done. You need a way to raise capital. You need a way for the government to do things so that they can invest. These things don't happen on their own. So for that 6-7% GDP growth, all these things are part of the game.
Welcome back. Well, a few minutes to go before we get into the weekend, but not before we go to Nimesh. He's joining in to fill us in with D-Street Chatter. Nimesh, the financials yet again, the banks are leading the way.
Well, that's been the trend for the last couple of days, and that's backed by FI buying as well, which is part of my chatter, part of my delivering feedback as well for the last few days. But, again, Nigel, in a day of consolidation, but not a bad outcome, given that for the last couple of days, the global markets are not very supportive, and even then, the India markets are relatively outperforming. So, looks like it's a bit of momentum in the broader market stocks, some large cap financial names, which is helping the Nifty to outperform the global peers. So that trend continues in today's market as well. Again, financials are doing good. The bank stocks are well bid. That's the overall feedback. And again, the quarterly update has been pretty much strong across most of the financial names. So even that's helping the sentiment to some extent in the financial stocks today. I guess from a trigger point of view, most of the liquidity-driven triggers seems to be out of the way now. Earnings will be the next big trigger to watch out for. And of course, the commodity basket is something we need to track very closely, because crude going higher is a bit sensitive negative for the Indian market. So crude, commodities, that's something to track. But again, earnings will be a big trigger to watch out for, which starts next week.
Okay, all right. Nimesh, what about individual stocks? What are you picking up?
So in terms of individual names, the first stock is GB Realty, a big move in that stock and good volumes as well. I guess, the large part of the QIP pain seems to be over now. And I understand some, big family offices are active buyers again in this particular stock. From a trigger point of view, there is a big chatter that maybe the company is going to announce some large tie-up on the commercial, development very soon. So that's something to track in DB Realty. The second name is JSW Energy. Even that's buzzing in trade today, good volumes as well. The QIP got closed last evening, so the disclosure on the investors will come out today evening. And I understand some very large market names have invested in the JSW Energy QIP. Almost 90% of the book has come from the long-only fund, so that's again to track in JSW Energy. The third stock is NTPC. The power space have done well today, but NTPC stands out. For the last couple of days, very good accumulation happening from larger domestic mutual funds, and hence a lot of deliveries getting marked in NTPC, and that's been the case today as well. And the last name is Bata India. In a good trending market, Bata India has been under pressure today on sell flows, and of course there was There was a Citi note in the morning. They've put out a 90-day negative catalyst watch on Bata India, and they expect quarter four to be quite soft, and hence Bata is under pressure today.
Okay, all right, Nimesh, thanks a lot for that. Explains why that stock is under pressure. Well, let's go back to Mitesh to get us some trading ideas. Mitesh, fill us in with your list. Mitesh, I think you're on mute. We'd like to hear what you're saying.
Yeah. Is it audible now?
Yes.
Okay. So some big breakout is happening on the charts and reversal is happening on the charts of SBI cards. So we'll recommend that with a stop at about 724 for targets of 745 for tomorrow. And PNB remains on the buy list amongst the banking names. So BTST here with a stop at 135 half for target of 138 half 139.
Okay, all right, got that. Thanks, Mitesh, very much for the calls. You have a great weekend, and we'll see you again with the markets on Monday. But for now, let's get you more perspective. An exciting conversation that we had with veteran investor Ramdev Agarwal, where he called on the government to step up the divestment drive after elections. And he said that there is still excess equity demand, more demand versus supply in the market. Hear out the snippets in what was a jugalbandi between him and Manish Chokhani of Enam Holdings.
Of retail investor, and the force of it, people have still not, I mean, now people are getting sense of it, but they have still not understood. Till 2020, we are getting about 300 to 400,000 customers per day, per month, at the industry as a whole. Come COVID, digital onboarding starts, no physical checkup for onboarding. In 5 minutes, you start your trading and all, and we start getting 4 to 5 million customers per month. 4 to 5 million customers per month. From 40 million demat accounts, now we have clocked 150 million. And I think this is 3 years story. And when you imagine 5 million customers a month, and these customers are cumulative in character. They're not flow, they are cumulative in character. And we are headed for maybe 300 million straight in 3 to 4 years. And maybe, I don't know what is the end game, maybe 10 years of 500 million.
We are setting ourselves up to say, India is the only large economy in the world of this size which has growth ahead of it, not in the rear view mirror.
What is the investment theme? I mean, you are very good at...
So there are 4 or 5 things which, you see, we are just copying what's happened in other countries. So it's nothing unique. We've all trod the path before. And if you look around the world, typically, as again Samiran was pointing out, when you get richer, you don't buy FMCG goods, you buy consumer discretionary. So you spend more money on improving your house, you'll spend a lot more on property, you'll spend on travel, you'll buy a better car, you'll do all your home improvement stuff, you'll go out to eat. So consumer discretionary is one very, very, very big play. Housing, of course,
so you start with that, but do you think it will never trickle down?
No, it will obviously, because each time when you build a home, there are 5 people who are supplying and 10 people who are servicing you. And India has this unique pyramid of that 2% Australians, 18% Filipinos, and then maybe a billion people living in Africa, and it will trickle down. And if I then see the math, for example, 20 years ago we were selling 1 million cars, same as China. We have barely crossed 4 million today. China is at 26 million cars. We sell something like 12 or 13 million air conditioners. China is at 220. So that's the scale of change which lies ahead of us in the next 10 years.
All right, that was a lot of great perspective from market veterans. Well, we do have to take a quick break right now, but as we take the break, here's a quick programming reminder. Our weekend special editors roundtable is coming up at 4:30 today. And let's get you a sneak preview of what the themes are on the show. Today, Nigel is going to highlight the surge in precious metals and what are the non-linear plays on gold and silver. And Kumar Mangalam Birla-backed Birla Group with a combined revenue of $75 billion has started FY 24-25 on a tear. The conglomerate with over 7 lakh crores in market capitalization and amongst them, the top 10 groups in India is making the right moves which help them add 2 lakh crores in market cap in just the last 1 year. Nimesh will take us through the details. And finally, Ekta will round up all the action from the RBI monetary policy today after the RBI left rates unchanged. So don't forget to tune in 4:30 p.m. today.
It's now 1 percentage point rally on the Nifty Bank, 460 points higher, and we've still got about 8 minutes of trade left. So banks are clearly providing that leadership. And now Kotak Mahindra Bank is also joined in the party. All through the day, it was only HDFC Bank, but now look at Kotak Mahindra Bank. Stealthily, it's climbed up. IndusInd Bank is now back in the green. ICICI Bank, too, has recovered 1.5% from the day's low. And now rest of the private sector financials, too, are participating in the up move. Hemang Jani is with us on the show. Hemang, you want to take us through some interesting ideas, any stocks that you've added in your portfolio or you're recommending to your clients of late?
Rima, can you repeat that question, please?
I wanted to know about some of the stocks that you're recommending to your clients. It's an open-ended question for you.
Yeah, Rima. So basically, I was talking to an industry expert in the chemical space, and what is coming out is that for some of these chemical companies like Tata Chemicals or Gujarat Alkalis, the power cost and the gas prices are stable and they've actually corrected a little, whereas the finished product prices like caustic soda and phenol have actually gone up. So I think from a technical perspective, some of these chemical companies do provide a good risk reward, and we've seen some action in names like Tata Chemical and Gujarat Alkalis. So I think for a 12-15% kind of an upside, this space is looking good. It is not as if that across the board, the chemical companies are well placed. There are many companies like GSFC and GNFC which are struggling because their product prices have not gone up. But selectively, we do see revival in that space.
Okay, all right. Hi, Hemang. Good afternoon and good to see you in. What about the CGD players? There was some buzz earlier today. What do you think is getting them excited?
Well, Nigel, the first reason is that the quarterly numbers, the previews have started flowing in, and what is looking like is that about 14 to 16% kind of operating profit growth is what we are witnessing. There were also reports that maybe the government may amend the policy and they will allow more competition to come in. But if you look at the law, in detail, there was already a provision that over a period of time, they will allow more people to come in, but that will not be more than 10 to 15%. So I don't think there is a concern on that front, but at least from a quarterly numbers perspective, both MGL and IGL are looking good.
Okay, that's a take on some of the gas stocks. IGL, by the way, I noticed had just done a huge spike. IGL has started moving up quite a bit.
6%.
Yeah, there's about a 6% move, and a lot of that has happened in the last 1 hour. Pull up the intraday chart on IGL. Yeah, that's a 6% up move. That's IDFC, IGL, Indraprastha the gas. Specifically on city gas distribution, I mean, what's the thought, Hemang? Would you buy anything afresh?
Stocks have gone up, but I think Petronet LNG, there again we are looking at about 8 to 9% kind of growth, and we think that given the softness in the landed gas pricing and versus that the price at which Petronet is selling, it is also providing a good entry point. We would be comfortable buying into this one for a 15 to 18% kind of an upside.
Okay. A couple of the infra plays have had a good day today, as have some of these other financiers. Again, I'll repeat the stocks: ICICI Lombard, SBI Card. SBI Card, must ask you about this, Hemang. There's been a lot of sort of value destruction there. Obviously, regulatory issues, RBI slamming the brakes on unsecured lending, and this stock was right in the eye of the storm. So, considering that it's been an underperformer, would you look at it, or do you think there's still too many regulatory headwinds?
So, apart from the regulatory headwinds, if you see the quarterly performance in the last about 3 to 4 quarters, the credit costs are going up. You're not seeing any material increase in the pre-provisioning profit as such. And now with the UPI players and there's a very small distinction between a pure card play versus the entire ecosystem, digital ecosystem, which is evolving. So I believe that instead of SBI card, we should look for either some of the fintech companies or banks.
Hemang, thank you very much for joining in. Enjoy your weekend. We're counting down to today's market session. Absolutely flat on the Nifty and the Sensex. It's been a very range-bound session today. We have the RBI monetary policy, and it's been a status quo policy. Rates remain unchanged for the 7th consecutive policy. Stance remains unchanged. The inflation forecast for next year stays pat at 4.5%, and so does the GDP estimate for FY25, unchanged at 7%. So markets unchanged, but mid-cap outperformance continues week to date. The mid-cap index is up 4%, and banks have come to the party today. Today's been all about banks. The Nifty Bank ending with a gain of about nearly 500 points, with names like HDFC Bank, Kotak Mahindra Bank. In fact, the top private sector financial today will be Kotak Mahindra Bank and not HDFC Bank. But others too. State Bank of India joined in the party, ICICI, IndusInd Bank. By the end of it, all of them were in the green.
Well, that's...
No, I was just latching on to the financials, banks, absolutely. Even the life insurers, I mean, both life and non-life, it's been a good last sort of 1-2 hours. ICICI Lombard is 5% higher. Then you have HDFC Life, SBI Life, so they've all done well. I think barring Bajaj Finance, most of the other names from, large names at least, the mid or large names from BFSI, they've had a good session.
Well, that's right, Surbhi. And a few more stocks that are on my radar. After a while, the FMCG names make it to the list. Marico came out with its set of numbers. The street likes it. The stock was up close to around 4% by the time we wound up. So good going out there. You had Godrej Consumer. That stock, in fact, had a good run. Then it corrected. But in today's trading session, that one as well popped up in trade. So that one goes home virtually at the high point of the day. Metals continue to shine. So whether you're looking at Hindustan Copper, Vedanta, Nalco, all of them went home with good gains in trade. A couple of underperformers as well, frontline underperformers in today's trading session. Bidla Soft, the big outperformer, Trent came in for some profit taking. And Dalmia Bharat, this week we told viewers that be careful with regard to this price increase. It could be pushed through, but how much of it is accepted is important, and we'll get that decision in the next week or so. Most of the stocks have come off the highs that we saw in the week. Dalmia Bharat is lower. You have a couple of other names as well that did end lower in today's trading session. Well, so that's curtains down then.